So something like the Grayscale Bitcoin Trust is looking to convert to an ETF, and I expect that shouldn't have too much issue in getting that through. If that's the case, then strap on in, because then we're talking about demand, a demand spike for the actual Bitcoin asset that a structure like that can and does hold directly. And so that all of a sudden, all of these private pension pools and pots that currently don't have access to it. Like if you've got a SIP, you can't buy Bitcoin through your SIP. There's no way to buy it, direct exposure to it at the moment. But if there's an ETF like the Grayscale Bitcoin Trust becomes an ETF, and that holds direct Bitcoin, that becomes a much more direct pathway. It's still not you owning Bitcoin, as Kit rightly you point out. If you want to hold Bitcoin, go buy Bitcoin. But inside of certain structures like that, and I know the Australian superannuation industry, which superannuation is what the Australians basically call private pensions, that has got trillions of dollars in capital locked up in it that for a lot of people can't access directly something like Bitcoin. But a direct Bitcoin trust that is an ETF unlocks that door. So I think that's going to be a pretty significant change. And it's interesting how this has all coincided with Bitcoin's price getting up around all-time highs. I mean, what's your forecast on this, Kit? You talking 100K in a year, 500 million? Where do you sit on the scheme of these things?
Well, look, clearly this is the forecast everyone has been waiting for.
Welcome to the Exponential Investor Podcast. Want to be a better, smarter, more clued up investor? Well, you've come to the right place. We cover the breakthrough investment ideas you don't hear about in the mainstream to keep you on top of the megatrends and opportunities reshaping our world.
Good morning. Welcome to another episode of the Exponential Investor Podcast. I am your editor, Sam Volkering, here with my co-editor, Kit Winder. Thanks again for joining me, Kit. Now, where to start this week? Got a couple of things I'm going to throw at you. Actually, I'll let you choose. Do we start with Bitcoin getting close to its all-time highs and the launch of a Bitcoin futures ETF? Or do we start with everybody having to replace their gas boilers with heat pumps? Where would you like to start?
New time high, always a buy.
Well, it's buy the dip, buy the all-time high. I mean, and then everywhere else in between isn't. That's kind of, I think, our mantra for a long time, hasn't it been? What do you make? Have you looked much at the Bitcoin ETF, the Bitcoin futures ETF that launched this week at all?
Yeah, there's some nice stuff going on. So when I first read about it, I thought, oh, cool, it's an ETF that holds Bitcoin, but it's not. It's an ETF that uses cash and derivatives to mimic the price action of Bitcoin. So I don't understand what the point of it, except for getting around various legislations or regulations. Do you? Okay, actually, what I do understand, I guess, is that when the price of something goes up, the financial industry wants to somehow monetize that for their own benefit, and so launching products that essentially piggyback it is what they do. So that's pretty much what this seems to me to be. There's presumably some demand for this structure of product for regulatory reasons in terms of who is allowed to therefore hold something that looks like Bitcoin. If you want to buy Bitcoin, then buy Bitcoin. Don't buy it.
I mean, there's an element of that to it, right? So there's a couple of things I think that people don't quite understand around this. For a start, it's not actually the first Bitcoin ETF. It's just the first Bitcoin ETF in the United States. And you're right. So it's a derivatives based product. So it's Bitcoin futures. It is not actually holding physical. I say physical Bitcoin, but it's not holding Bitcoin. But what it does do, as you say, it provides access to an asset class that can actually be a little tricky for people to get in. And I say people, but it actually ends up being organizations and different structures that can't necessarily buy Bitcoin direct because it doesn't meet certain regulatory obligations, custodial obligations, things like that. So when a company like ProShares decides to do this, it gives them a pathway in that they perhaps didn't have before. Now, having said that, you were right about the popularity, because I think within the first day of trading, it did something like over $500 million in, was it 500 million or 500 billion? I can't remember. It broke pretty much every record for the first daily launch of an ETF of this sort of
I'd be pretty
magnitude.
amazed if it was 500 billion.
Yeah, I was going to say 500 million just doesn't seem like enough. 500 billion
Of the
sounds,
market cap of Bitcoin.
yeah, pretty much. Now, I think there's sort of two things about this. One is that if you're in the UK, you're a UK investor, there's a good chance you still can't trade this, and you probably won't be able to until the brokers over here decide to provide access to it. So get on the phones if it's something that you're interested in. Get on the phones to your broker, and keep kicking down their door. I'm sure they've already had plenty of people doing so. So I wouldn't envisage it's too long until you can access something like this, because the UK did ban derivative crypto products in the UK, and shut off access to it. But as an ETF and not an ETP, or any of the more complicated things, even though it does deal in derivatives, as an ETF structure, I believe that it should be accessible, hopefully, for UK investors. But as we say, it's a derivatives futures product, not Bitcoin directly. But what is on the way is that now that that's trading, it's somewhat cleared the pathway for a ETF that does hold Bitcoin directly. So something like the Grayscale Bitcoin Trust is looking to convert to an ETF, and I expect that shouldn't have too much issue in getting that through. If that's the case, then strap on in, because then we're talking about demand, a demand spike for the actual Bitcoin asset that a structure like that can and does hold directly. And so that all of a sudden, all of these private pension pools and pots that currently don't have access to it, like if you've got a SIP, you can't buy Bitcoin through your SIP. There's no way to buy it, direct exposure to it at the moment. But if there's an ETF like the Grayscale Bitcoin Trust becomes an ETF, and that holds direct Bitcoin, that becomes a much more direct pathway. It's still not you owning Bitcoin, as Kit rightly point out. If you want to hold Bitcoin, go buy Bitcoin. But inside of certain structures like that, and I know the Australian superannuation industry, which superannuation is what the Australians basically call private pensions, that has got trillions of dollars in capital locked up in it, that for a lot of people can't access directly something like Bitcoin. But a direct Bitcoin trust that is an ETF unlocks that door. So I think that's going to be a pretty significant change. And it's interesting how this has all coincided with Bitcoin's price getting up around all-time highs. I mean, what's your forecast on this, Kit? You talking 100K end of year, 500 million? Where do you sit on the scheme of these things?
Well, look, clearly this is the forecast everyone has been waiting for. What does Kit Winder think the Bitcoin price will do? No, I mean, I think it's curious that when big news like this comes near to a sort of, or after, or late into a sort of little bull run. So the Coinbase IPO, for example, kind of marked a short-term top in the Bitcoin price, and again, that's sort of a reflection of the maturity of a cycle where the financial markets have had time to gear up and try and monetize this thing. So I think back in 2017, it all happened very quickly. It all happened so fast. But there were sort of product launches and big bits of news around the top in 2017 that actually, if you were thinking about it, were probably a signal that good news was getting saturated or whatever. But yeah, it's a signal as much that a lot of bull market has already happened as that there's more to come. So I think that's worth bearing in mind. But there are also, as you've been speaking about in recent weeks, fundamental changes to the asset itself, which I think are maybe more exciting. And then maybe if you combine the changes to the nature of the asset, which improves it technologically, which improve its privacy, its speed, its things like that, and you obviously know far more than me. If you combine that with the potential addition of liquidity through ETFs or opportunity for, as you say, the burgeoning, obese, unbelievably weighty tax burden that is the global pension system, to that, then you have a pretty potent combination. I've always been a sort of cautious person, and I always just advocate people being interested in doing what they can and learning about it and putting it as part of a sort of wider diversified strategy. And that sort of remains the same. You shouldn't be super bullish or super bearish on Bitcoin. You should just sort of include it in your thoughts and include it in your portfolio. And that's like the most boring advice ever. So that's why people pay for your work and not mine, I guess.
I don't think it's quite as clear cut as that, but you're right. And look, the thing is, I think this comes against the backdrop of a number of factors. So it's quite easy for everyone to say, oh, the price has been pumping because of the ETFs. I say that's certainly a factor of it, but you're absolutely right. The fundamental upgrades to the core network, to just the function of how Bitcoin operates, that as well is certainly a backdrop of that, and I think an increase in the value of the network itself, and hence Bitcoin. And it also continues to come in, a backdrop of, inflation, which is continuing to creep more and more into global economies. It's now seeming like there's an appetite amongst investors and the wider market, understanding that the central banks are going to have to probably increase rates, which is something I've been saying for a while, that they've got no other option, but they have to put rates up if they want to keep inflation under control. Otherwise, we'll see double-digit inflation before we know it.
They've got to keep rates down, otherwise they're going bankrupt.
Wow. So this is the dilemma, right? And this is why I think this continues to paint a pretty promising picture for something like Bitcoin, because they're damned if they do and they're damned if they don't when it comes to the current global financial system and monetary policy and what they decide to do or decide not to do. And then yet at the same time, however many billion it was gets announced this week to continue to push the green transition, and the great headline grabber that everyone's going to have illegal gas boilers and they're going to have to be replaced. I mean, is it that clear cut? Is it as simple as right? It's literally going to outlaw gas-fired boilers. Everyone has to have a heat pump. And if so, I know you guys have been looking at an area. I think you've been looking at a specific company in that area as well. How's that sort of going off the back of all of this?
Yeah, so in the, or I guess on our buy list or in our portfolio of recommendations, we have a heat pump stock, leading European company, high quality products, basically a leading company in that field, and it's going well so far. We think the company is essentially excellent. It's a sort of quality approach to investing, and then thematically, yeah, the direction was pretty clear for heat pumps over gas boilers in terms of the energy efficiency they can offer. And then there's the hope that or the expectation that as an industry like heat pumps scales up, you get two advantages, which is technological improvements and economies of scale, and those sort of combine to drive costs lower. So at the moment, it's something like a heat pump might cost around 10 grand, and so what the government in the UK has done is offer a £5,000 grant, so halving the cost maybe of a heat pump depending on what you're using it for, and also then making it cost equivalent to a gas boiler. And then every year after that, the heat pump is more efficient, so you save money on your electricity bill. So the upfront cost has reached parity with this new subsidy, and then the ongoing costs are cheaper. So it's sort of what electric vehicles have, where their upfront cost is slightly higher and their ongoing costs are much lower. So over the lifetime, it was already cheaper, and that was true for heat pumps as well. But most consumers probably struggled to think about their boilers with a 15-year levelized cost analysis.
And most people don't necessarily live in one house for. Oh, well, I say most people. I don't actually know the numbers on it, but I'd be surprised if people stayed in one house for 15 years.
Exactly. So it's a pretty good policy. I think do you remember? Oh, there was a government policy earlier this summer. I can't remember what it was, but it was sort of threatening that you couldn't go into restaurants and clubs and whatever without a vaccine, sort of hoping that they wouldn't have to enact it because everyone would then just get a vaccine and then you don't need the policy. I would imagine that the no gas boilers by 2035 thing is maybe along similar lines. The hope and the expectation within large parts of that industry or within government circles is that the technological improvements of heat pumps and the way the world is going mean that it will be unnecessary to outlaw gas boilers in 2035 because it will be the natural choice for every new building. The subsidies will have encouraged enough people to swap them out in the meantime, that by 2035 the picture will be so different that outlawing them won't be necessary.
Yeah, I get that feeling as well, as that the shock factor of illegal gas boilers now is far greater than the actual reality of by the time we actually roll around for the next 10 years. So getting a heat pump will be just like replacing a gas boiler with a gas boiler today.
Yeah.
So yeah, I think there's certainly an element of beat up about it, but like you say, there's it's pretty clear that if that's going to be the direction of how things go, that there are going to be stock market opportunities to play it as well, which you guys are clearly all over as well. I just wanted to wrap up today with just one final thought. I don't know if you've looked much into it. I certainly haven't, but maybe this might be something we look at for next week or in the future. But the copper market at the moment seems to be a little bonkers. I'm not 100% sure if that's a byproduct of everything we've just said, or it's just the next metal to start to fire off. Any sort of insight as to what's going on there at the moment?
Yeah, to an extent. I mean, the extent to which it's going to be crucial in the rollout of the energy transition technologies that we've talked about regularly on this podcast over the past few months, solar and wind power, energy storage, electric vehicles, and the rest is sort of pretty well known. So there's a huge and very compelling demand story over the next couple of decades, really, for copper. And then something that I am less expert on and know less about, but I'm aware of, is the slight unease around supply and the slight unease around, I guess, the dwindling sort of ore grades that existing mines are working with, and the low number of sort of new high grade mines that are being discovered and brought online, and how long that takes as well. So I think it's something I've been trying to get my head around over the last few weeks, to be fair, and I've read a few things about it, but I wouldn't yet say that I could tell you exactly what's going on. But there is a supply story as well as a demand story, I guess, and the demand side is more well known, but if people want to look into it, and I'll continue to do so, there are issues around supply as well that I think are maybe slightly less well understood.
Yeah, absolutely. I mean, if any of our listeners or viewers have got some inside industry information about, what's going on in the industry and how it might be impacting the copper price, feel free to write into us at Exponential Investor. We'd love to hear from you as well. If you've got insight about a specific industry that you may be working or know very well or have researched for a very long time, we're happy to hear and discuss on our podcast and in our editorial. But that's all for this week. Thanks again for tuning in. Thanks again, Kip, for your insight. And we'll be back again with you next Friday with another Exponential Investor podcast. Bye for now.